What's up, everybody? Welcome to the Gray Rabbit Financial Report. I'm your host, Tyler, and today we're going to be looking at a yearly forecast for the major indices in the markets. Let's hop on into the charts. Today we're going to be starting first with the SPX. This is the S&P 500, and this is the monthly chart. And so as you can see here, back in December 2021, price touched at the top of a major trend line and has since then just been in a bear channel down with lower lows and lower highs. And now here we can see this tall wick forming and resistance here at the Kijun-sen, which is the green conversion line. We also have an Ichimoku death cross, and the Kumo cloud is flat. So I expect this to be a bull trap heading into March of 2023. It's going to meet resistance like we're already seeing here, and it's going to continue down here. And on the Fibonacci time cycles, we have this hitting the bottom major trend line around September 2023, and this is going to be at the 3,198.39 level. So we can see a major shift in momentum in this market, and we're going to be monitoring this chart throughout the year. But right now, this is the thesis that we have, so we can expect a bounce right around that level. So let's get our carrot in there, and the gray rabbit is going to be happily feasting on that carrot down at these lower levels. Touching on a little more detail, if we go to the weekly chart, we can see here that we do have a gold cross, and the Chico span is tracing the candles. And typically what this Chico span does, which the Chico span is the yellow line on the Ichimoku indicator on this chart, and this is a lagging indicator. And basically what it is it's the current price projected 26 periods back in time. So this is 26 weeks back in time, and typically the way this Chico span works is that when it's below these candles, that's a very bearish signal. And when it's above these candles, like here, this is a very bullish signal. So right now we can see that the market is sort of ranging, and the Chico span will tell you that when it's just tracing the candles. And so we can see that if it's going to continue tracing the candles, it's a possibility of further downside. Now looking at that, and then adding in resistance here from the Kumo cloud, those are two good ways to see where the resistance levels are. And these are also part of the thesis as to why the market is going to head, in our opinion, head further down to the 3198 level. So keep an eye out for that. Here's the carrot, and that should be happening sometime around September 2023. Okay, let's move on to the NASDAQ 100 index. Now you can see we touched the top of the major trend line in November 2021, and since then we've had lower lows, lower highs, and a bear channel down. We're also meeting the same resistance as the S&P 500 at this 1.272 Fibonacci retracement level. The Chico span here, the yellow line, is below the candles. We also have an Ichimoku death cross. The Kumo cloud is flat. And we have stochastics here still waiting for the gold cross. This is very similar looking setup to the last chart on the S&P 500. We can expect to see further continuation down, a touch on this lower major trend line here at the 8,910 level. and I'm looking to see this bottom here around sometime in March 2024. So let's keep an eye out on that, and let's keep watching the price action, and I will keep updating these charts as I see fit. But until then, let's expect to get that carrot right around this level, 8,910, March 2024. Okay, let's move on to Bitcoin USD. Bitcoin USD, let's see. So you can see here we have a double top at the top of a major trend line. We have a bearish channel down, lower lows, lower highs. We have the Chico span now currently below the candles. We have an Ichimoku death cross here. Even more interesting, we have an Ichimoku cloud twist, which is forming the bearish version of the Ichimoku cloud. And we have the current price level here very close to breaking below the Kumo cloud. So we're going to keep an eye on that. And we also have down here the stochastics still waiting for a gold cross. Now, my target for Bitcoin is $12,184. This is going to break below this major trend line here, and we can expect to see this next bottom sometime around June 2023. So let me add our carrot, and yes, just to reiterate that, we will be checking these charts and updating if we see anything different in the price action. There is a possibility that price could continue a bit further up, but it's, I'm very positive we're going to see another touch on this trend line at some point, and so let's keep an eye out for that. Now, if we head to the weekly chart just for a little bit more detail, we're going to see some of the things we saw earlier. We have this Chico span kind of getting tangled up in the candles here and tracing them. And we also have heavy resistance from this very thick Kumo cloud. So, when you see a thick Kumo cloud, until the price breaks through that cloud and you see a bullish twist like you do here in the chart, we have to assume that the downtrend is going to continue, and so we will be keeping an eye on that too. So right here, 12,184 around June 2023. All right, let's move on to the monthly chart of Ethereum USD. And here you can see the top formed on the major trend line, and this was back in November 2021. Ever since, we've had a bearish channel down with lower lows, lower highs, and we have the Chico span here almost below the candles, so we're waiting on that. We do have an Ichimoku death cross, and we do have an Ichimoku cloud twist. Now, what's interesting in this one is we have a descending P wave here, if you can see the structure. And statistically, these descending P waves tend to break down, just like ascending P waves tend to break up and be more bullish. So just going off of that, we're expecting another break of this major trend line here. And we're going to get the first carrot is going to be in at this level here, and that is $872.67. That's our first price target, and that is going to be in July 2023. And our next target is going to be down here, so 136.58, and that is going to be around March 2025. Now, I know a lot of people might be praying that their crypto portfolios go back up, but we have to use what the chart is giving us, the Fibonacci levels and the time cycles, and we also have to look at the big picture. Consumer credit card debt is at an all-time high. Inflation has been running hot for the past years. Um, a lot of people are really getting squeezed right now. And wages have not kept up with inflation. So I think you're going to start seeing people considering selling some of their riskier assets, and you're going to see a lot of retail traders capitulate. Um, and we're going to start heading into the more desperation phase of this bear cycle. So, don't want to be the naysayer here and bring the negative news, but this is what I'm seeing in the charts, and as always, we'll keep watching the price action and continue to update as we gather more information. But we can expect these two price levels, 873 and 136, to be good targets in the future. And another thing too that we need to look at is also the stochastic, which has not gold crossed yet. So there's still some more room for this to continue down. Until we get an indication of price moving back up a bit. So we're going to continue to look at this, and here let's zoom in on the weekly chart. We're having the same kind of setup as before. The Chico span is here, kind of just in this range, and it's tracing the candles. We're meeting resistance here at the Kumo, and until we can break through all of these resistance levels, we got to assume that the trend is going to continue down. So let's keep our eyes on that. All right, for the next chart, let's move back to the monthly. This is the US dollar index, DXY. And let's get that adjusted. So you can see that we formed a top here in September 2022, the top of the major trend line. Since then, we've been in a bearish channel down here. Now we have lower lows and lower highs, but not yet on the monthly chart. And as you can see here, we are starting to get some support here from the Kijun-sen, which is the green line. And so I expect to get support here and bounce back up on this retracement, and then continue this N wave down. We also have an ichimoku death cross on the weekly chart, so I'm gonna switch over to the weekly real quick. Let's get some more detail here. This is going to give us some more detail here on the ichimoku indicators. So here we have an ichimoku death cross. We have the Chico span underneath the candles. And right here, if you can zoom in on that, there is a slight Kumo cloud twist, which is starting to form, the bearish Kumo cloud. And we can also see too that the price is starting to lose momentum. If you look at these candles, right now we have 4 days left of this weekly bar, but if this is an inside bar, this could be a good sign for reversal back down. But either way, if the price continues back up into this ichimoku cloud, it will meet resistance, and I expect it to continue further down to these levels here on the bottom of the major trend line. Now we do have a gold cross starting to form here, so that's why I think we're going to see price bounce back up a bit into May 2023, and then get rejected back down. And we are looking to hit this lower level here at 94.74, and I'm expecting this around August of 2024. So let's put that carrot in here, and let's keep our eyes peeled for continuation of these trends here. But this is where we're having the most confluence with the Fibonacci time cycles and retracement levels and projections. So this is where we're going to keep looking for. Okay, moving on. This is U.S. oil. Now this is pretty interesting. If I'm not sure if you're aware, but the U.S. has been dipping into our strategic reserves, um, which has been curtailing some of our demand for oil. Um, but from some of the reports I've been reading, that we're going to need to start replacing that oil around April of 2023. Um, so I'm expecting a stronger demand for oil, and regardless of what's happening in the news, the charts and the Fibonacci levels and the price action really help us see sort of the future trend of the market. And so, as we can see here, we have price breaking out of here on the monthly chart, breaking out of this descending trend line and starting to form an N wave up. We have, if you look closer at the price action, these candles here, we have two inside doji bars, and we have higher highs and higher lows. We also have the Kumo cloud forming into more of a bullish Kumo, and the price is above the Kumo. We also have the Chico span above the candles, and so you can see that we are now entering in a bullish channel up. Now I expect price to reach $150 per barrel by February 2024. And so let's add our carrot up there. We have other news of a lot of the OPEC countries starting to curtail production. And this is just a result of, the U.S. printing money and trying to trade that printed money for natural resources. These oil producing countries are not going to get the short end of the stick, so they're going to make sure that their profits and what they're charging per barrel are actually fair for them. So I think that's why we're going to see the price of oil continue up. Other macroeconomic events like the war in Ukraine, these things like that could also drive for the demand for oil. So we're gonna, today we're focused on the charts, but some of those stories I'll touch upon another day. But anyways, so like I said, look for the price of crude oil to be around $150 per barrel, February 2024. Okay. Now, here we are. This is the chart for gold. As you can see, gold here was resisted at the top of the major trend line. The price is breaking now below the Kijun Sen, which is the green line. And we have an Ichimoku death cross. And we also have the Chico span below the candles. My target right now for gold is at this level here, which has confluence from all the Fibonacci levels, like mentioned before. And this is the $1,521 level. We can expect the price to touch this level around August 2024. Next, let's move into silver. Now we're here at the monthly chart for silver. We can see here that price was resisted at the top of the major trend line. The price closed below the Kijun Sen, which is the green line. We have an Ichimoku death cross, and we have the Chico span here below the candles. And it's tracing the candles down. The next target I see here, based on the Fibonacci time cycles, is going to be here at the bottom of this trend line, and that's going to be in July 2023 at the price $15.64 per ounce of silver. Now, if you're interested in investing in physical silver, I can guarantee that the premiums will still be pretty high on silver at that point. Um, but the spot price of silver should be continuing down to that level. So keep an eye out on that, and if you're interested in loading up on physical silver, um, obviously dollar cost averaging is a great idea, just to be safe. But if you want to load up the truck, so to speak, I think around July could be a great time to do that. Now let's move on to the monthly chart of platinum. You can see here, same exact setup. We were resisted at the top of a major trend line. Price closed below the Kijun Sen and also the Tenkan Sen, which is the blue line. We have a ichimoku death cross, and we also have the Chico span now below the candles. If I zoom out, you can see here that we have this trend line that's been acting as a good support level. And with our Fibonacci confluence, here I expect the price of platinum per ounce to reach the $827.29 level around November 2023. So keep an eye out on that, and don't forget to get your carats at that level. Okay, now just moving on to something more of a macro outlook. We know that the Fed is raising rates, and an idea that I've been thinking about and contemplating lately is how much more room does the Fed have to raise these rates? Now you can see we have this trend line here, and we've broken out of this trend line, and we're continuing up. So the next resistance level here is at the 5.25 level, and so I think that it's going to be pretty tough for the Fed to raise rates beyond that level without causing some major cracks in the global economy. We've already seen cracks in the system with Credit Suisse and the credit default swaps. We've seen problems in England with the pension funds there. I can go on and on, but if you have any, if you watch the news about finance, I'm sure you've seen these stories, so you can research them a little bit further on your own. But just looking at the chart, in my opinion, I believe they can raise rates into the 5.25 level before meeting resistance. And so if you look at the schedule for the Fed, the next meeting is going to be in March, and then we're going to have one in May, we're going to have the next meeting in March, May, June, and July. And so I expect a 0.25 basis point raise in each of these meetings. Now, this is a chart I found from Brain Rules. So shout out to Brain Rules, whoever you are. Good job. But this shows the effective federal funds rate overlaid with the S&P 500. The S&P 500 is this orange line here. And what I wanted to point to your attention is that every time the Fed raises rates and then goes neutral, shortly after we have a crash in the markets. So you can see that we had one on October 30th, 2000. We had one in July 30th, 2007. And we also had one on May 2019. And so if we look at the previous charts, we're looking at further continuation down. So around July could be when the Fed decides to go neutral, and then later this summer we can start to see the price move down to the levels we were talking about. So, if you kind of like add all these charts up together, this is my thesis. But I do think that it's not going to be a soft landing, like the Fed is predicting. But only time will tell. But if we look at the charts and we use the Fibonacci levels, I think we can get pretty close to kind of forecasting the future price action. So, anyways, shout out to Brain Rules. Um, Thank you for this chart. It was very interesting. And now I'm gonna move back to mine here. So, yeah. So right now, we're right at the 4.33 federal fund rate. And so if you measure that up to the 5.25, we get pretty close. It says 0.94 here, but we get pretty close to one full basis point. So if you split that up by the next four meetings, that's 0.25 basis points each meeting. That's not going to be much of a shock to the markets. And then I think, and something will break. The Fed will go neutral. As you can see, this is where they go neutral, and it's flat lines. And then we'll be back to the same cycle of quantitative easing and lowering the rates and printing more money again. So buckle your seatbelts. But anyways, I hope you enjoy this analysis. My name's Tyler. This is the Gray Rabbit Financial Report. You can look for me on TradingView also. I have all these charts posted up there. Feel free to share and like with your friends if you found this content helpful. Thank you for your time. Thank you for being here. I'm going to be doing weekly updates on all the various markets, and I'm going to be focusing on Forex markets especially because I'm a professional Forex trader. That's my bread and butter. But I do like looking at all the other markets and just getting an overall sense of where we're at. So if you have any feedback or any ideas of your own, feel free to comment in the comments section. And yeah, thanks for your time. Good luck in the markets, and peace.